Okay, good afternoon everybody, and welcome to the Audit and Governance Committee meeting for North Northamptonshire Council today on 17th of June. I'd like to welcome councillors, officers, any members of the who are joining us remotely. I'll just run through some housekeeping rules. Please, can all mobile phones either be set to silent or switched off for the duration of the meeting? As I've mentioned, it's being live streamed on YouTube, so welcome to those members of the public joining us online. And moving on to the agenda, just ask Callum if we've got any apologies for this meeting. Thank you.
Thank you, Chair. We've had apologies from Councillor Anslow, Councillor Lee, Councillor Jackson, Councillor Lovell and Councillor Eakins, with Councillor Watts acting as a substitute for today.
Okay, I'd like to welcome Councillor Watts. Thank you for joining and attending this meeting as a substitute. It is appreciated. Moving on to agenda item 2. Are there any declarations of interest of members for matters on today's agenda? No. So I'll move to agenda item 3, which is the minutes of the meeting held on the 15th of April 2024. I'll just ask members if they're happy for me to sign the minutes of the last meeting as a true record.
Just to register, Chair, that I gave my apologies, but it's not down as apologies.
Okay, we'll make that amendment in the meeting, in the minutes. Thank you. To see if there's any other points to note. As there isn't, can I seek a proposer and a seconder? Councillor Marks proposing and seconder, Councillor Roberts. Okay, all those in favour, please show. Thank you. That's unanimous. Thank you. Carried, sorry. Okay, moving on to agenda item 4. This is the Auditor's Annual Report for 22-23. It's important that we reflect on those 2 dates there. When we come to Mark Stocks from Grant Thornton, he'll explain why we are where we are with this. I find this a particularly useful audit report for the way it's done within the public sector now, and I'll hand over to the partner from Grant Thornton to present this report, and also Claire to help with any other aspects during this presentation. Thank you.
Thank you, Chair, and good afternoon, everybody. So this is the Auditor's Annual Report for 22-23. I'm aware we're a long way from 22-23, so we will start our 23-24 work quite soon, and that will come out in a more timely way than this one has. But what we've tried to do is bring this as up to date as we can. So when we've looked at an area, then such as finance, then we've looked at right up to where you are now. So it is still relevant, and I think has some good messages and some strong messages for you as well. The way our work around value for money works, we focus on 3 areas. We focus on your financial sustainability. We look at how you're governed, and then there's a very wide category called economy, efficiency and effectiveness, which looks at basically the overall performance of the council, but it covers a vast area, so all the way from your strategies through to performance management and so on. It is quite a wide-ranging area there. If I could just turn you to page 16 of the pack, and I'll talk you through the main messages. I'll talk you through the key recommendations, and then I'll hand back to you for questions.
Can I just interrupt 1 second there? Before you start on that, when I'm looking at the front page, it says Interim Auditor's Annual Report. Can you just explain what the status is? The reason I'm asking that is, for example, there's some recommendations in there which refer to do this by the 31st of March 2024. So I just want to make sure when will this be a final? And
So the reason it's interim is that I'm not allowed to finalise it until I've issued the opinion on the financial statements as well, because I have to bring it all together. So in reality, this won't this won't change in any kind of significant way, other than, you know, we'll probably update the financial statements part when we complete it.
Thank you.
Is that okay, Chair? So just going to page 16 then, and these are sort of the key messages. So in terms of financial sustainability, I actually think you're in a reasonable position in terms of your finances. You're at least as strong as most of the councils that we work with. You know, you have a reasonable level of reserves, so, you know, you've got pretty strong budgetary control and budget setting processes. So I'm not overly concerned. You do have some challenges, though, particularly with regard to the Children's Trust and the level of overspends it's had in recent years. There's also, you know, like every other council, the actual savings gap going forward is quite a significant one. Now, some of that can be closed by increases in council tax, but it is, you know, you can't relent on your savings either. You know, you need to deliver those alongside any changes that you have to make, that you make in terms of the budget. But overall, you know, I do think your finances are reasonably strong, and I will come back to the key recommendation. In terms of governance, again, I think your core governance processes are there. We look at tone from the top in terms of the messages that are coming from both members and from officers, and there's nothing there that I'm particularly concerned about. You know, your overall risk processes are in place, and we can see, you know, a strong internal audit process as well. So overall, I think your governance is where it needs to be. Now, having said that, you have some particular challenges, and we've discussed some of these challenges at previous audit committees. You have to make more progress in terms of disaggregation of the balance sheet. That's gone on for quite a while now. That process, you know, needs both you and West Northamptonshire to come together, but that does have to be resolved, because without that, it's really difficult to give a full view of where you are in terms of your finances. And then, as you know, we've not yet signed an opinion on the financial statements. Now, that's hopefully going to be sorted by the government, or even the new government when that gets in. But, you know, we are working very closely with officers. We've now got the 22-23 financial statements. The 23-24 ones will be with us around the end of June, and then we're going to commence our audit of the 23-24 financial statements really early on in July, to hopefully get it all sort of tied up and complete by Christmas. But both officers and myself, you know, need your support in getting those financial statements complete, and sort of, you know, you kind of holding us to account at Audit Committee, I think, is important going forward. The final area just to talk about, so just moving on to page 17, is around, as I said, the very wide-ranging area of economy, efficiency and effectiveness. I'm okay with the overall council plan. I think the performance information's there. I think it could perhaps be a little better, a bit more detailed, a bit better ordered, but, you know, in general, those processes are there. Obviously, there are challenges around the Children's Trust, so, you know, I'm not going to go through those in detail, but they're in the report, and mainly around, well, I think the Children's Trust is both finance and the performance in terms of, you know, of how children are cared for. I did want to pause a little bit on housing, because I don't think you've made the progress I would have anticipated on housing. I think there's more to be done, both in terms of, you know, bringing the Corby and Kettering housing stock together, in terms of getting stock condition surveys done and resolving some of those issues around non-decent dwellings. You know, so there's quite a lot, I think, for the council to do to make sure that its housing stock is in the right state, and it's been managed effectively over the next few years. So just moving down the page, so we have raised 4 key recommendations. The first one on page 18, that deals with the accounts and the need to get the accounts up to date and completed. Recommendation 2 on page 19, that deals with disaggregation. I won't sort of reiterate the points that I've just made. Page 20 deals with the Children's Trust and, particularly the need for those transformational savings to be made if you are going to sort of get that back into balance and both deliver better care and a good financial position. And then on page 21, there's quite a lot of detail in there in terms of the improvements needed around your management of the housing stock. There's quite a lot more detail in the report, Chair. I'm more than happy to take any questions on that, but I was going to pause there and take any questions from members. Thank you.
Yeah, thank you. I will move to the members. But before I do that, I'd like Claire to have a say on what the officer perspective on this report is, and just the key points which Grant Thornton's identified and where they're focusing, and also, more importantly, the messages that are coming through. If you could do that, and then I'll go to the members and ask for their views and opinions.
Thank you, Chair. Yeah, I think in terms of what's coming out in this report, I think the items that's been highlighted are items that we know from an audit and governance perspective we have brought into this committee, and obviously look to seek to challenge and gain those reassurances, in particular with the Children's Trust. The management responses in there do articulate the fact that we are and have undertaking transformation board with the Children's Trust into seeking to ensure that we can gain savings going forward into this financial year, and that has been very successful in terms of bringing in external consultants to help us identify those savings, and that board continues to challenge and ensure that we can deliver transformational savings into the children's services. And it does acknowledge that there has been a lot of work in that space with the children's services, improving and managing those relationships, and actually trying to deliver better controls in terms of forecasting, which has obviously been part and parcel of the issue that we've experienced, particularly during this financial year that we're referring to in 22-23. And working with that team to ensure that we can get better clarity over the children's that we hold and children cases that we have, and the high costs of cases, so we can ensure that we can manage and forecast those better. Moving on to the second point, I would like to say on the disaggregation, I know and I hear that this has taken a long time, and whilst obviously I understand that it's important to get this resolved, there's a paper later on in the agenda that sort of does speak about some of the issues that we have been dealing with alongside working on the disaggregation in terms of closing down all the legacy accounts. So we are committed to resolve this and get this agreed as soon as we possibly can. We're looking at meetings with the West that we are hopefully can try and conclude very shortly, and hopefully that gives us a positive outcome that we can move forward on that and give us the financial basis to close down the accounts and sign off all our opening balances. We've got some management responses in here in relation to the housing. So what we did have when we set up Northamptonshire, we didn't have a dedicated housing director. We did recognise that we needed to have that in place. So as you know, the housing director has been put in place since April 23. So it has been slow in moving towards merging those two accounts, but we are looking to commit to obviously getting that up and running and get the strategy delivered and merging the accounts together as soon as we can. So that has come to here. It is part and parcel of some of the audit recommendations as well that we're monitoring. So again, we understand what our key risks are, and hopefully that assures you that we have been asking the right questions as part and parcel of the Audit and Governance Committee. Thank you.
Okay, thank you, Claire. Look to the members and see if there were any questions. Thank you.
Yeah, sorry, thank you. You mentioned a few times the disaggregation of the balance sheet. Now, for people who are watching, that's probably going to be a term that's not readily sort of understandable. Is it possible to give a very brief explanation of what that means and a brief timeline as to how we're solving that?
Okay, I'll ask Mark to provide the technical description of what's happening there with that disaggregation, and I think the discussion maybe add a few more bits of detail on that, Claire, if you can follow up with that afterwards. Thank you.
Want me to go first?
If Mark could do the technical part first, if that's okay.
well, I think Claire's probably better at the technical part than me, but it's yeah, I suppose in simple parlance, when you divided up the balance sheets of the, you know, when you formed as two councils, yourselves and West and Northamptonshire, so then there were a number of bodies that had balance sheets. So when sort of you aggregated those together, but then they needed to be divided between yourselves, and that process is still ongoing, particularly around cash, but also around something called the capital financing requirement, which is, I suppose, an estimate of your borrowing, which you then have to pay the minimum revenue provision on. Now that's a big figure. So, and how those two figures are divided up will have a significant impact on how your balance sheet looks and what minimum revenue provision you have to make going forward. I'm now going to pass to Claire to give a much more technical sort of explanation than myself.
Thank you. So just to reassure you, there's sort of, as Mark alluded to, there's 2 to 3 lines on the balance sheet that we have not concluded on yet. So the significant part of the disaggregation has actually been done based on principles that were agreed and have been finalised. So just to give you an example, those sorts of things have been, principles been set out based either on location, geographical location, based on grant funding formulas, depending on what grant you might be splitting up, or reserves, or it could be on council tax base, etc., etc. So all those principles are outlined and documented and agreed by both parties. As we've alluded to, the capital financing requirement is 954 million, so it's nearly £1 billion. Unfortunately, the county council balance sheet that we're inheriting is highly geared. So we have significant levels of debt. And what we are trying to understand and agree is exactly the proportionate split that each council is going to inherit. Because once we agree this is it then forever. And if we get this wrong, fundamentally, as is said, the financial risk to each party could be quite significant. So whilst the cash balance itself that underpins or is the result of this is quite small in terms of 40 million, the capital financing requirement adjustment account, which is the other side of this, is about 128 million. So the cash is the outcome, the balancing figure, if you like, once we've decided how the split of the capital financing requirement is factored in. So it's quite important that you do understand it's complex, the information's not complete, trying to understand, because it's all based around assets, so a lot of the borrowing's triggered by an asset, and it's making sure that those assets are in the relevant county council's asset portfolio, and that we do end up with a borrowing portfolio that's reflective of the assets that we've inherited. And I think that's the key thing here, is trying to ensure that we have the asset basis that reflects the borrowing that we are going to inherit. There's real borrowing in terms of physical borrowing that we also have on the balance sheet, which has already been disaggregated. But again, that's part and parcel of some of the negotiations that we're trying to work through with the West, and make sure that that's sitting in the right places and it's reflective of what we've inherited. So we know where our geographical assets sit. And it's making sure that all flows through the balance sheet.
Thank you very much.
Thank you for those explanations. Just looking to members, see if they've got any further questions. Councillor Hakewill, thank you.
Thank you, Chairman. The whole issue that we just talked about, we talked about 2 months ago, and it doesn't feel like we've moved forward. 954 million to be broken down between the two. What's the logjam that's happening there? Because, as I understand it, we almost have no idea what position we are in now, with 3 years of non-opening balances and non-closed accounts, and some sort of battle between us and the West to identify what those assets are. So that really does disappoint me, that we aren't sailing on our own voyage, but we're still sort of passengers or two sets of passengers. So that 954 million has interest being paid on debt. How are we paying that interest when we don't know whose is what? How are those creditors being paid? And I appreciate we've got the portfolio holder here. It would be really good to know how the political aspect of working with the West is operating to conclude this. Because I think our friend from Grant Thornton last time said, you know, by December or the end of this year, you have got to have done it. And we're now another 2 months closer. That's my first question, Chairman.
Okay, thank you. Before I go to Claire, I think it's important that we'll remember what happened with the sign-off of these accounts and the frustrations we all experienced. So when we looked at disaggregated balance sheet, it's got to be an audited balance sheet. That audit wasn't concluded on the county until Q1 of this year. So I'm similar to Councillor Hague. The initial thing about that number is concerning, but I think we need to be mindful of the fact that that's the gross number. There's some large aspects of that which will be, on a principles-based approach, able to be split up. So it comes down and down and down. And I think I'll hand over to Claire now to give that fuller explanation. But I think we all remember why we got to this position as well. And it's not a 3-year journey. It's from when that balance sheet was audited, because we couldn't do anything until that point, technically.
Thank you, Chair. So I'll answer a couple of those points as well as then handing over to Lloyd if he wants to add anything as well. So in terms of any interest, it's been accrued. So we are aware, obviously we don't know exactly what the cash balance will be, but we have an indication of what that might be. And we have been doing a prudence-based approach in terms of our accounts. So the borrowing side, which is one element, is a physical known amount. The £954 million is a combination of what you have physically borrowed and what you've internally borrowed. So the externally borrowed, we've already split between the two authorities, and we know exactly what we've got there in terms of interest payable that we need to pay to PWLB or to the West on our behalf. The cash side is slightly more difficult, but again, we haven't set anything aside in our accounts in order to have that come back to us, but we are aware of what that might be in terms of estimates. So that all is something that we know and I've been working closely with on the West. So we know the component parts of everything that we're working with, and we've got estimates that we're trying to ensure that we can prudently account for within the accounts that we have. So hopefully that sort of boxes that one off in terms of any pressure or income that we may have. In terms of the other angle, in terms of negotiation, we thought had an option agreed, but then for whatever reason that was not agreed eventually once some of the details were worked out. So we did have an option that we thought was agreed on paper at the end of April, and some of those things then were not agreed. I won't go into too much detail in terms of what was not agreed, because that's between the West and the North in terms of what they decided they weren't happy with. But we are working closely with myself and my counterpart to bring that back on track and get that back round the table and to a conclusion. So again, in terms of timeline, we've got a meeting this week, which I'm hopeful we can get conclusion of very quickly in terms of what the proposal that we've put forward is acceptable or not. And what we're trying to do, one of the things you need to bear in mind is that we're trying to ensure it's a very fine line in navigating, that we don't actually put one or either council in any financial jeopardy. So it's not, we're not trying to ensure that what we do come out as a result, both for the West and the North, is not to disadvantage one or the other. So it's trying to, it's a very fine line to ensure that we can get it to be as neutral as possible. It's not a nice balance sheet to actually carve up, so whatever we come out as a result will not necessarily be in a good place, just because of the balance sheet that we've inherited, because it's very highly geared. So it's making sure from the future financial landscape that neither authority is disadvantaged by the disaggregation of that balance sheet, which is really tricky to try and make sure that we get both authorities in the same place and are both agreeing that that outcome, although being a negative outcome, is palatable. So that's the sort of journey that we've been on. So there's been many, many discussions. I'm hopeful that we're now getting to the sort of one or two little items that we can open up for discussion and agree by the end of this week is what I'm anticipating in terms of timetable.
So, Chair, just to very quickly come back. When we talk about disadvantaging one or the other, the county of Northamptonshire, whichever way you look at it, has a debt of 954 million, which we've dug out of the balance sheet. What are the forward-looking issues? I mean, what are the criteria? There must be some sort of set of criteria. Our worst analysis is this, our best is this. And if it's our worst, how are we going to remain sustainable if we do or don't meet an equitable process with the West? What I suppose I'm saying is we're heading into a situation with a certain amount of data, but what are the potential impacts on us? Which is what I think, as Michael said, people watching this on YouTube are going to say, well, how will these councils survive, even though there may be a bit of a balancing? What is the impact on all this paperwork of what we see at the moment, let alone it being finalised?
Through you, Chair. What we're trying to do is to ensure that neither council's disadvantaged by the outcome that we come up with in terms of disaggregating the capital financing requirement. So what we're trying to do is ensure that that's as net neutral as possible and accommodate it within the financial landscape that we already have. So we've already set aside and estimated in our budgets what we believe our minimum revenue provision will be and should be. So it's making sure that we keep within those lines and make sure that it's not the movements that we can actually accommodate and we can forward plan what they are. So we're trying to ensure that, like I said, it's a very fine line because there's not much give in that line in terms of either party. So what might be beneficial to one will not be beneficial to the other. So trying to come to a position where it's net neutral, as I'm sure you can appreciate, there's lots of different things that once you look at one element, it can unravel another element, and that's where we've got to at the moment. So where you're trying to say, well, if we do this, then that might have a knock-on effect on this over here. So you end up having to reopen things that you may have already agreed on in principle in order to accommodate some of the moving component parts to ensure that either party can walk away from it going, it's not ideal, but it's the best we can do. And that's where we're trying to land that narrative. It's not really, the position's not good for either party, but it's making it, like you say, to ensure that we have financial stability ongoing. And that's why it's so important that we get this right. And I know everyone's frustrated that we haven't done it, but we have to ensure that what comes out of this is an outcome that we can manage, and that's as good as it's going to get. And ensuring that we can financially accommodate it once we then fast forward it to where we currently are. And that's all we're trying to do. It's trying, and it sounds a bit vanilla in where it says net neutral, but that's as much as we can try and make sure that we do, that either party can agree, that we've got it as best as we can. So when we present it back to you as members, that we're all cited in terms of what the financial implications are, and we've already mitigated them, as like we said before, within our budget process. So part of that budget process is ensuring that we can mitigate any of those financial elements that might come up down the line.
Okay,
thank you.
Thank you, Claire. Just look to see if any other members have any questions. Councillor Jelly and then Councillor Roberts. Thank you.
Yes, thank you, Chair. Wasn't this issue referred to the Secretary of State to mediate? Has that been resolved, or did we get any feedback from the Secretary of State?
I'll ask Claire to update you on what happened with that and where we stand at the moment. Thank you.
Thank you, Chair, through you. Yes, we issued a letter requesting the Secretary of State to provide support in arbitrating the issue between ourselves and the West in relation to the disaggregation of the balance sheet. Unfortunately, DLUC were minded to not provide support and for us to appoint our own arbitrator, which, again, we are working closely together with the West to avoid that. Whilst it's there in the background, we are both conscious and committed that we don't want to go down that route. It will be a very costly and long exercise for either party. You know, so, and it's a bit of an unknown outcome. So rather than leaving it to chance, I think it's better that we do agree it prior to going down that route. So we are trying to avoid it, but as a task, we were asked to ensure that we could make sure there was provision if we can't agree it. And when do we go to arbitration if the conclusion is we have to agree to disagree at a certain point, then we just need to go for it. But we are both committed to avoiding that.
Thank you. Councillor Roberts.
Yes, Chair, it sounded to me that we're getting close to an agreement, and all power to your elbow on that one, because it's something that we've been eager to see for quite a while. Could I ask about a particular type of loan within the, I don't know what you call it, portfolio of debt, lender option, borrower option, which are particularly onerous? I wondered if there was any residue of that left within the work that you're doing.
Okay, thank you. Claire, could you field that one? Thank you.
Yes, certainly through you, Chair. So currently the split of loans gives us a split of the what they're referred to as LOBOs. So we have currently would have had at the 1st of April £45 million of those. We have repaid one of them back. So we're currently sitting on about 37 million of that. Also 35, I can't remember exactly the number. It's in the latest Treasury outturn. So essentially we have repaid some of that, so that's really good that we've managed to be able to do that with our surplus cash balances, and we'll be looking to continue to review those as and when they are up for call. I think there's 27 million of that loan portfolio that could potentially be called in during 24-25. So if they are, then we'll review them as and when they are called in. So far, when that loan was recalled in, they were looking to increase the interest rate from about 4% to 6.5%. So they are looking for quite a lot when they want to call it in. So we are trying to mitigate them, and we have provision to mitigate them within our cash surplus balances.
Chair, and both sides are taking responsibility on. Thank you.
Okay. Thank you for those questions. Before I wrap it up, I'd just like to ask Mark for a wider opinion. You did give us some of that when you went through and give us some assurance about, say, our financial sustainability. I wondered if you could use your wider experience to say, because on the face of it, this looks quite negative report, but I don't actually think it is. I think it's reasonably positive because we knew most of these things. Could you explain how we compare to other similar-sized councils at this point in time, because there's wider issues, and also some who may have had a similar history to us, i.e. come into this unitary environment, for example? There's one very clear candidate, not too far away in this county, and so just compare and contrast where we are in the wider local authority world, and should we be alarmed?
Thanks, Chair. Good question. So I think this is a difficult environment for local government at the moment. I think particularly on the finances, we see quite a lot of authorities that are financially challenged. You know, you've seen yourself, sort of some have had to issue Section 114 statements, but just in general, the demand-led pressures of particularly of children's social care and adult social care are there for all of local government, not just for Northamptonshire. They're there for everybody. So so any any council that has to bring together a number of bodies is always going to face challenges, to be candid, because, you know, trying to get in place the performance and governance, never mind the financial arrangements, is always going to be a challenge. And so I'm, you know, so in terms of the accounts, I'm not surprised where you are with the accounts. There's over 600 sets of accounts open across the country, and you know, and I think there's probably something for the government to think about how it does bring kind of authorities together, and how the support is there for the accounts. I've said it once already, I'll say it again. I think you have been slow on disaggregation. I'm sure that's not a message you want to hear, but I think you have been slow. I think you do need to get that sorted now. But in terms of the other areas, I would expect you to struggle on housing, trying to pull it all together. So I think everybody's struggling to sort of, you know, respond to the housing challenge. Social care, I think you're sort of in the pack on adult social care, and children's. Well, you know the challenges in children's, but they're no different to anyone else. So I don't see you as a challenged authority. I see you as an authority with challenges. So if you see the distinction, so there are things that I need you to focus on. I need you to keep that focus on finance. I need you to keep that focus on disaggregation. Together we need to sort out the accounts. So we have to get you into a position where I've reported the accounts, and then there are some service issues that you need to resolve. But I'm saying that to pretty much every council that I go to, because it is challenging times. Thank you, Chair.
Okay, thank you for that wider insight and that balanced view. That was really helpful. I think when I look at the whole report, I try and look at it in its totality, and I think there's no surprises. Number one, there's nothing coming out that we were unaware of, and I think this committee, when it reads all those things in there, it'll see that it's things that we've had our finger on the pulse for a number of years. So there was no surprises there, and I think it was generally fair comment. So whilst it may ostensibly seem quite harsh because we're putting it all on a report by exception basis, but when you give that wider balance and compare us with others, I think that really helps. I know there was 4 main areas. I think if we look at the accounts, there was through no lack of effort or desire. We worked really hard to try and clear off all those accounts, districts and boroughs. We had specific issues with Corby and East Northampton. The bigger one was the county. So we just got to take that one on the chin. It's a fact of where we are. And there was the wider aspects there of what was happening in the audit world. Disaggregation, I would say there it takes 2 to tango. And I think I'd like to think we took a principles-based approach, but I'm really encouraged by progress being reported recently. I think on the Children's Trust, the third of the 4 key areas, it's good to see that operationally it's moving closer together. We was very much on this from an audit and governance perspective as well. And I think we were looking for sources of assurance, and maybe when Rachel gives her update, we'll see how much progress we've made there to some extent or other. Maybe some issues around medium-term financial plan. I think, again, housing, we've made lots of comments, and we've asked housing to come back to this next committee to give us some explanations. And I think it's wider than what you say. I think they're all valid, but that's very much through a prism of, or a lens rather, of Corby and Kettering. Is the housing for North Northamptonshire. The first thing that's missing is the strategy. So everything emanates from the strategy. The HRA is important, yes, that's a technical accounting issue to sort out, and all that stock condition. But I think that is a thing we need to keep our eyes on really closely, and we will ask them back to the next committee to give us an update, because I think things have been. I know this is 22-23, but we've got to operate in the here and now. And I'll be looking to get some significant progress, because it's been since April last year where we started making a lot of noise about this. So I think all those things together is not not as negative as it first appears. So we do have recommendations here. Is it question or comment?
I thought this was a committee that would debate things. So when you decided to wrap up,
is it a question or a comment, please?
Yes, I take the completely reverse view. If we're in a convoy of ships called local government and we're sinking a little less slowly than some at the front, that doesn't give me any reassurance. But if we look at, and I got confused about the page numbers, page 9, executive summary from Grant Thornton. Here comes my question. I hope that's all right. It says page 9, or the other page is page 3, Grant Thornton. 2022-3 risk assessment. No risks of significant weakness identified. And then the next column says one significant weakness in arrangements around expenditure of the Children's Trust. Well, that just doesn't seem to make sense. And you keep going. No risks under governance.
Is there a question here, please?
Sorry?
What's the question, please?
The question is, how have we got a report here which is saying in one column no risk and the next column a risk?
Okay, I'll ask Claire to answer
There
that
may
question.
be more questions too.
No, one question, thank you. Claire, can you answer that question, please?
So the way we approach the audit...
Sorry, Mark, I was just going to ask...
Oh, sorry, Claire.
I'll ask you to come in afterwards, but I'll ask Claire to answer it initially, thank you.
So you're referring to the table that's in page 9? Yeah. Yes. And I think Mark will probably expand on this, but essentially what the question they're trying to answer, was there any risks or significant weaknesses identified in that particular area? So if we take financial sustainability, for example, and their answer is yes, there's one significant weakness in arrangements that they've identified. So the question is in the 23-24 risk assessment column, and the answer is in their judgment or arrangements. That's how the table should be viewed. Is that what you're trying to ask?
Yeah, through you, Chairman, I just don't understand it. I'm a little sad that questioning is being cut off, but that's how it might be. Really sad.
Okay, Mark, would you like to add anything to that question?
Well, yeah, just going to the page. So the way we approach any audit is that we do our planning and we assess risk at that time, and then we go and do the work. So if you look at 21-22, which was I think the first year, so we'd looked at the council and formed a view, but that was on incomplete information. So because that's what we knew at the time, and then that rolled forward into the planning risk assessment that we did for 22-23. So you recall, you may recall the audit plan, which would at that time gone, well, there's no risks that we're particularly going to focus on. And then when we've come to do the work, then we've obviously found some risks in the arrangement, which is that middle comment. So the only difference between is one was a planning assessment and one was the actual findings.
Okay. If I look at the recommendations, just before we go to that, there are a couple of points where it's got implementation dates by 31st of March, and obviously the report's dated May, which is a bit odd. So I think before we finalise, if we can revise the due dates, because it seems we obviously can't implement them before the report's issued. The recommendation is that the Audit and Governance Committee notes the annual report for 22-23 attaches Appendix A. Can I look for a proposer for that, please? Councillor Marks, a seconder. Councillor Roberts, all those in favour? Any against? Abstentions? One abstention. Okay, that's passed. Thank you. Okay, a lot of these agenda items are intertwined, so if we move on to agenda item 5 now, which is the financial statement of accounts update, and I'll hand over to Claire to present this report. Thank you.
Thank you, Chair. I thought it would be a really good point on time to give you an update in terms of the financial statement of accounts in light of the report that we've just listened to and reviewed. Just to sort of give you an idea of where we are, what we're doing, what currently our outcomes are expected to be, and really just to sort of celebrate, whilst it's been quite negative in terms of disaggregation, I thought it would be a good opportunity to sort of celebrate what we have done and what we have achieved. Because I'm really pleased in terms of where we are, and I'm really excited in terms of where we're going to get to by the end of this financial year. So there's lots of things trying to bring together in one report that we've been talking about, and just to make sure that we do formalise that the fact that the 21, 22 and 22, 23 accounts are not going to be audited. As we've spoke about, we are going to exercise the backstop date. So that does mean that those accounts will be disclaimed. So what we're trying to do is then, this is to bring us in line with the current timetable. So all the effort and focus is going to be on 23, 24's accounts, so that we are then back in line and we've dealt with the backlog from the government's perspective. We were anticipating the backlog date to be the end of September, but due to the election being called in July, we now believe that that might move to the end of December, although that's still to be confirmed. So it's just to sort of reiterate and make sure that we are aware that when we spoke about this, and it's just sort of to formalise that that's exactly what we're doing and what we're undertaking. So just again to put it into national context, so as at the 31st of May 2024, there was only 41% of authorities that actually published their accounts. So if the 128 authorities had published their accounts out of the 315 that could have published their accounts. So it's still an improvement for 22-23, where we only saw 30% published by that date. But as I'm sure you can see, that the national landscape is also demonstrating that there is a significant backlog. We're slightly an outsider with this, obviously. We're in the throes of, obviously, at the LGR. So we are caught up within this cycle, and we're one of those statistics that's in here. So Section 4 sort of gives you a bit of an outline in terms of the national context, currently in terms of where we're trying to see and sort out the backlog. So the government has dictated that we have to do this by a certain date, which is where the backlog date has come in, or the backstop dates come in. So in Table 1 of Section 4.3, I just wanted to sort of outline in terms of what we've managed to achieve. So we have provided a draft outturn to the auditors. The initial account drafts have done for 21-22, 22-23, 23-24 is due by the end of this month. So obviously we stopped doing all the audit planning for 21-22 as soon as the backstop date was available, and we haven't done any 22-23. We have done all the audit planning for 23-24, and that's still ongoing in some areas, and as you've seen, we've now concluded the value for money reports for 21, 22 and 22, 23. We're on track to start the audit on the 1st of July. That current team will be with us and resourced up till December. So that then just shows you sort of the magnitude that the audit will take. What we still don't have clarification on yet is whether or not the opening balances will be subject to a statutory override. So that's still going to be an ongoing conversation between whoever the new government will be and the NAO and FRC. Obviously, what we did have leading into all of this work was that we did have 7 sets of accounts still outstanding as at the 1st of April. And as the Chair has alluded to, we only just signed off the Corby accounts in April 24 was our last account. So it's not for a want of trying to ensure that we could actually deliver NNC's accounts. Obviously, it's an unusual situation where we'd still be dealing with the legacy authority accounts all in one place and all at the same time. So the team has undertaken a mammoth task in closing all those down, and we've had and set up really good controls and processes in place to deliver our NNC accounts in a much more timely fashion. So the team have done incredibly well, and hopefully we are on target to ensure that we can deliver the audit in a timely fashion with Grant Thornton, and we're working very closely with that team to ensure that we can deliver that. So I'm really pleased to sort of outline where we are, and hopefully that you can accept and note that we won't be doing the audits for 21-22 and 22-23 as the recommendations outline. Happy to take any questions.
Okay, before I do, could I just ask Mark to add his wider knowledge and national profile about where he thinks this might, where we are in terms of the opening balances, because I'm sure that it would seem to me that we've got a solution for a nationwide problem here, and if we have to audit the opening balances, we could be in another problem of delay. I don't know if you, obviously from your national role, if you've got any more insight here, and I know you won't have the answer, but if you could share your thoughts, it'd be appreciated.
Thank you, Chair. I actually thought Claire did a really good job, actually, of just sort of articulating where we are, because I think we had a plan, the government had a plan about what it was going to do with the accounts. Obviously, we're now into a new election, so all those plans are effectively parked, because whoever takes over in government needs to determine whether this is still the right thing to do. Now, I think this will still go ahead, because I don't think there's that many options now, because if you come back to ourselves and local government to ask us to audit another umpteen set of accounts, then the delays will continue. But everything has stopped, Chair. So I know you'd like me to give you assurance. We have had conversations with the department, we've had conversations with the NEO and with the Financial Reporting Council, and I think fairly they've gone, well, we can't prejudge what a new government's going to do, and so they've quite rightly just paused. So unfortunately, I think we have to pause as well until we have a new government. But we have made it clear that this does need a resolution, and it does need to be resolved as quickly as possible. Okay,
and subject to that being as we anticipate, have you got the resources for the deliverability of this? Obviously, I know there's been wider problems in the audit industry about resources. Are we okay? Can we deliver on that 31st of December timeframe that Claire outlined?
Thank you, Chair. We've worked really closely with Claire and the finance officers, so all our planning's complete now. The audit plan was cleared by Janice just before she left. So we've done all our business process work. So we're literally, as soon as those accounts are there, then we start on the 1st of July, and I can see no reason that we can't clear your 23-24 set of accounts by Christmas. I can't see any reason why we can't do that. We have the resources and we have the capacity. We just need a bit of guidance from the centre about what we do with the older accounts. Thank you, Chair.
Thank you, that's helpful. I just look to members, see if anyone's got any questions or comments. Councillor Hayquart.
Thank you, Chairman. The situation with not putting accounts forward would not be conceivable for a FTSE company, and we're a 470 odd million. That is really disappointing that we're in a situation nationally as well of not having audited accounts from that point of view. My first question is, how, when you look at the national situation, do you, to whomever's going to answer this question, recognise that we are in a different position from a council who have been sailing along for the last 30 years, got accounts and have got a track record? We are very different because we're disaggregating from the county. So how do we make our case as NNC and arguably West Northamptonshire, as you might well have experience of places like Central Bedfordshire or Cheshire East and West? How do we identify to government that we are in a different situation because we have no track record? That's my first question.
Through you, Chair. I suppose that the difficulty is that we're not able to differentiate ourselves at the moment, currently, because all the guidelines that we have to apply are statutory. It's disappointing that we haven't been seen as different or differentiated, but that's not necessarily in the gift of the external auditor either. So I think, you know, we are where we are in terms of our journey, and it's disappointing that we can't continue to have those accounts audited. But at the same token, I appreciate that we're all trying to resolve the backlog issue, and I suppose they have to call the line somewhere. It's not an outcome I would have foreseen, and it's not an outcome I would really want. And I would probably say that for either party. Neither of us want to be in this position. But given the landscape and I think unforeseen circumstances that have happened within the audit market, you know, I think, you know, that we could not have foreseen some of the issues that we've faced, obviously, during COVID as well, with a lack of resources. So that bubble has just grown bigger exponentially. So I can't say I'm overly comfortable with it. I understand why we're doing it. And like you say, would it happen if you're a FTSE 100 company? No, it wouldn't. But again, we're very different. Even though we follow the same accounting rules, we are very, very different from them in terms of comparison. But again, I don't know if Mark wants to add anything to that. You know, it's disappointing that we're not differentiated, but we're not looking for any special treatment. And the audit team that we will be working with, if from an audit perspective, will be auditing us accordingly, you know, in terms of where we are on our journey as a new authority. So that's already built into your audit plan.
Thanks. Would you like to add anything there, Mark?
So we have had quite a lot of debate nationally about whether there should be exemptions, and the answer eventually has come back. There has to be, you know, one size fits all. I think is probably the best phrase I can use, and that's a very good reason. So if we determined here that I should audit your 3 open set of accounts, so then it roughly takes me 6 months to get through a set of accounts in terms of all the audit work. So that means sometime towards the end of 25, I will have audited your 23-24 accounts, and then I have to do the 24-25. So you never catch up, councillor. It just keeps on going, and So the way we've sort of dealt with this nationally is that if the government does this, then there can't be a repeat. So the accounting framework needs to change. So how we audit needs to change, because this is a remarkable situation, and it's a remarkable ask of the government to actually allow us to disclaim opinions to catch up. Because your comparison to a FTSE 100 company, well, if this happened in a FTSE 100 company, then all the directors are dismissed and the company's dissolved. So I'm not sure we want to go down that route. But there are much stronger kind of sanctions in the private sector than there are here. So I think the government's come up with a reasonable compromise. It doesn't work for everybody, but it's the best thing we have. The thing is, once we've caught up, is that we can't go backwards. We have to keep on track. Thank you.
Okay.
When we look at this and we look at the landscape, the problem we're all going to have is that when these things hit our bottom line, the services that people like most are going to go, which has been the history for the last 10 years. Everything has been taken from highways and other aspects to put into social care. And that horizon is the most worrying for me, because we represent residents who quite like those services. So in the last line of 4.9, third line from the top, it says, knock-on effects of the proposals which may impact the audit of opening balances. Could you define what that actually means, which may impact the audit? What is the risk there? And do we have, again, a set of parameters? And perhaps, that would do.
Yeah, okay. I'll hand over to Claire if you just re-explain the point about the opening balances. Thank you.
It's trying to provide us with a wide enough cover that as and when we do our audit, if there is something that we have significantly misstated, then we're trying to caveat it that I don't think we have, I don't think there will be, but it's just trying to ensure that you are aware that as we have not been audited, that there is that risk. What will that mean to us? It may mean that I've got something classified in the wrong place. Does it change the overall value? Potentially not. One of the big areas that we always have a debate about, and I'll put it kindly, debate about, is always plant property valuations. You know, our valuations are always going to be difficult. I think one of the things we probably need to sort of separate is our funding side for the organisation as a local authority to our statutory accounting treatment of that. So what one doesn't necessarily influence the other. So one is where, you know, from a statutory perspective is how we present it, how we disclose it in terms of information and how we classify it. But our funding envelope won't change. So the funding to adult social care is still ring-fenced as your general fund reserve. It's whether we've made any errors within that classification of funding that could cause a problem. But again, they're not normally common. Most of the misstatements are around technical valuations and technical treatments of your financial statements, which they are very different to your funding arena. So one is almost sort of safeguarded, if you like, and one is how you're presenting it in line with the financial regulations. So hopefully that gives you some assurance in terms of what we're doing with the financial statement versus how we're then monitoring how we're financed.
Thank you.
Okay, thank you. So the recommendation is that the Audit and Governance Committee notes that the audit for 2021 and 22 has been ceased and that no audit will be carried out for 22-23. If I could look for a proposer and a seconder for that, please. Councillor Jelly and Councillor Marks. All those in favour, please show. Abstentions? Thank you. One abstention. Okay, so if we move on now to agenda item 6, which is the Global Internal Audit Standards paper. I'll ask Chief Internal Auditor Rachel to present this. Thank you, Rachel.
Thank you, Chair. So the Audit Committee will be familiar with me referring to the Public Sector Internal Audit Standards regularly in our reporting, which is essentially the professional standards that we work to in how we deliver the internal audit service. So over the last year, there has been consultation on some new global internal audit standards, and those are looking to come into effect from January 2025. But we are obviously encouraged to adopt them as soon as possible and start to align to those. So I just wanted to give the committee an initial briefing, really, on the implications of those new standards, and particularly in section 5.3 of the covering report, some of the implications specifically for the role of this committee and how that changes with the new standards in particular. So I don't intend to go through any of these in detail of the committee today, but what we were thinking was it may be useful to have a separate briefing session with the committee, probably as one of the pre-committee training sessions later in the year, when we could go through this in a little bit more detail as well and have the opportunity for a bit more discussion around the implications. So essentially, as I've mentioned in the report, I think we essentially operate in accordance with the intent of the standards. So the intent remains that we have a foundation of integrity, professional standards, independence, and operating in accordance with the expected standards of ethics. And obviously that is the foundations already within our internal audit charter. It's fundamental in how we operate. And it's also within the role of this committee as well. And I think a lot of that aligns with what we've expected and some of the self-assessment work we've done this year as well. So within 5.3, as I say, this particularly draws out some of the changes for the role of what the standards refer to as the board. And the role of the board is exercised within this council by the Audit and Governance Committee. So again, you may think that a lot of these actually align with how we look to operate. It is recognised within the standards that actually some of the elements don't fit naturally with local government. So for example, there's reference to the board being involved in the performance management of the Chief Internal Auditor, for example. Obviously within local government that's not how we operate, but I think we can look at how we align with that through regular meetings and through you reviewing the performance, through the progress reports that you receive. So it's just understanding our interpretation of some of those. I think just looking through it, there's reference on page 82 of the papers to meeting periodically with the Chief Audit Executive in sessions without senior management present. And again, I was pleased to see that. I think that's something we've already done at the last meeting. So as a committee, you're already aligning with some of that best practice. So I think it just shows that hopefully it's just continuing to champion the audit process and support us in the way that we already want to work. So there's nothing else I was going to draw out specifically at this point. As I say, I'm happy to have that separate session if the committee's supportive of that as a way forward. But I'm happy, of course, to take any questions at this point as well. Thank you.
Okay, thank you. Councillor Marks.
Thank you, Mr. Chairman. I mean, to answer the de facto question that the officer has put, I would welcome such a session on internal auditing. I think it would be very useful. And I think we'd all welcome it. Thank you.
Thank you. Councillor Hakewell.
Do we have enough people in internal audit to carry out the audit work that's predicted for this year?
Through you, Chair.
Do you want to pick that up when you do your review, or do you want to pick that up in this
I'm
part?
happy either way.
Okay, thank you.
So I'm happy to comment on that now, and obviously it's something that does come up later. Obviously, when I brought the paper at the last committee meeting with the internal audit plan for 2024-25, it was something we discussed at that point. At the moment, we do need to recruit, and we will be going...
I'm terribly sorry. There's something going on in the road. I can't... Could you get a bit closer to the microphone?
Sorry.
Couldn't hear you.
Is that any better? Sorry, can you hear me? Is that better? We will be going out to recruit to 2 vacancies within the team in the next few weeks, and based on a successful recruitment campaign to those 2 posts, we should be comfortable in terms of delivering our audit plan. In the meantime, to get us through the first quarter, we will be looking to buy in some additional audit support from the same arrangement that we have used in the past, which we know we can rely on with local government experience. So it's dependent on the recruitment, of course, and obviously we will do our very best to recruit to those posts. The pay and grading exercise, there was 1 post that was subject to an appeal. That now has been resolved, so I am now able to go out and advertise that post. That is something that had been delaying my ability to advertise. So hopefully that helps to give some context.
Thank you.
Okay, thank you. Before I go to the recommendation, if I could ask you to make those arrangements for the training, I think that would be useful. I'm sure everybody supports that. So the recommendation is that the Audit and Governance Committee notes the main changes and implications arising from the global internal audit standards. If we look for a proposer and a seconder, Councillor Marks and Councillor Jelly, all those in favour, please show. Thank you, that's unanimous. Okay, so that moves us on to agenda item 7, which is the internal audit report and opinion for 2023-24. So I'll invite Rachel to present the note to the committee. Thank you, Rachel.
Thank you, Chair. So yes, my second report is the annual report and opinion for 23-24. So the full report is provided as the appendix to the papers from page 91. So I'll just talk briefly through and introduce the report, and then I'll obviously be happy to take any questions. So the basis of this report, under the public sector internal audit standards, I am required, and as I will be under the new global internal audit standards as well, to provide an annual opinion on the Council's governance, risk and control framework. Now that opinion needs to be primarily based on our internal audit assignments and the outcome of those during the financial year. and any other sources of assurance that I've been given that I can place reliance upon. So this report really sets out my opinion. So the opinion is on page 93 of the papers, page 3 of the appendix, and it's within the box. So it just sets out the opinion, which as you can see is of a moderate assurance opinion, which is consistent with the previous year. And the definitions are within the report, of course, for that. And then I've just set out the different elements of the opinion. So we talk initially about financial controls, risk management, and general internal controls. So obviously during the financial year, I do report to this committee regularly at every Audit and Governance Committee on progress made with the plan and the outcome of audit assignments. So a number of the audits reflected within this report you have already received, the key findings of and the opinions. But obviously they're all pulled together in this report as an overall summary, and it also includes anything that has been finalised since the papers for the last Audit and Governance Committee as well. So I can just confirm as well there haven't been any audits issued since the last committee meeting which have had opinions of less than moderate assurance, so there's nothing to draw to your attention that's impacted on the audit opinion from that perspective. All of the audits that have had an element of limited assurance are reflected in the opinion on page 94 and some context around how those were taken forward. We also reflect on the implementation of audit recommendations, and there's further details of those within the report. And I've also had to recognise any limitations on my assurance opinion. Now, the limitations that I have included in this year's opinion are actually consistent with the previous year. So they relate to the Northamptonshire Children's Trust, which we are yet to receive their annual internal audit report. I have been advised that it is going to their committee this week. So as soon as that outcome is received, it will be shared with this committee at the next meeting. I have also received reports as they have been finalised from that audit plan as well. And just a quick note that the ones that I have received most recently were all giving opinions of good assurance. So I will be interested to receive that annual report, and that will be reflected later this year. So that's just a brief run through of the actual opinion that's provided on pages 93 to 94. And then the rest of the report really sets out the basis for that opinion. So page 96, section 3, provides you with, in table 1, a summary of the audit opinions. Based on the different areas and the opinions that have been given, and that includes both the design of the controls and the compliance. What I would note, and I think it does stand out from the table, is there were actually no opinions of substantial assurance given on any of the audits in 23-24, as you can see from that table 1. It isn't necessarily reflected in a huge increase in the limited assurances, because they've actually reduced since last year as well. I've given the comparator in the black box at the bottom of that table. We've actually had slightly less, 1% less in terms of limited assurance, but no substantial assurance. So it hasn't reflected in a move to the other end of the scale. What we have got is more in that good and moderate, those categories. So I think, and I suppose I just wanted to comment on that, because I think it's not necessarily a sign that the risk is greater or that we have greater levels of non-compliance, for example. I think it also shows that we've actually got a much more risk-based audit approach. As the council has become more risk mature, we know where the risks are, and I think we are auditing the right areas, and we are shining a light on those areas of risk. So for me, that's not necessarily an immediate area of concern. I think it means that actually we're becoming more mature and know our risks, and we're using audit as it should be to focus in those areas as well. So also within the report, as I say, table 3 provides a breakdown of each audit that has been finalised that makes up those figures. All of the limited assurance elements have been included in previous reports, so I won't reflect on those again at this point. And I've also referenced which committee these were presented to. You'll note that 8 of those were finalised since the last meeting, so those are included in the papers later on the agenda. So also within the report on table 4 is an overview of the implementation of all of the agreed management actions arising from audits during the financial year. So this shows that 65% of those were implemented. This has been an area of focus across the organisation in the last few months in particular. And I have been attending meetings of the corporate leadership team to really focus in on these and make sure that we are getting the attention on those to make sure that they are progressed. It also is of assurance that the Council is now incorporating the implementation of audit recommendations in its corporate health check, which is something that's being monitored on a regular basis by the senior leadership team. And again, I think it's raising the profile of that particular work. Finally, just within the report as well, we do also have a reflection on the performance of the audit service and our outcomes from our customer satisfaction surveys, for example, on table 5 on page 102 of the pack, which I'm really pleased to see assurance and that we have received feedback on all of our assignments of either outstanding or good from the management who have been receiving those audits. So hopefully that demonstrates that the audit service is adding value. The only other thing I was going to mention on table 7 on page 105 of the papers is an overview of investigation activity. So this is any fraud-related referrals that were received directly by the Internal Audit Service. So we monitor the report fraud mailbox, and obviously we can also receive referrals from other members of staff or those external to the organisation. So just an overview of those that we've received during the year and what the outcomes have been. Obviously we don't go into each one in detail, but just to give you an indication of the types of referrals and the types of outcomes. This doesn't include any outcomes from the National Fraud Initiative work that the service have also been involved with, which I will be reporting to the committee separately later this year as well. I just wanted to also mention just at this point that there, as you'll see on page 105, there were 12 referrals that were referred to the Department of Work and Pensions. And I just thought it was useful to note that I have been engaging with the Department of Work and Pensions recently with the view to engaging in some joint investigation work, because quite often if a referral, if a fraud has an element of housing benefit, it also has an element of council tax reduction as well. And this is something that hasn't been in place previously in Northamptonshire, so it's something that we want to engage with. So we've just had training on it. We're getting skilled up to do this. And the idea is that when any of those referrals come in, if there is an element of both council tax support and housing benefit, we will work together. There will be one interview under caution, there will be one investigation pack, and we will work closely with the Department of Work and Pensions to get the best possible outcomes. That also means they have access to some information we don't have access to, and we have access to information they may not have access to, so hopefully as a joint effort, it will be a more effective process as well. So I just wanted to mention to the committee that that's something we are pursuing as well in the next year. So other than that, that's a run-through of the report, Chair. I'm happy to take any questions on the detail. As I say, those reports that hadn't already been to the committee are in the next progress report on the agenda with further detail there. And the overall opinion should be a key source of assurance for the organisation in the annual governance statement for 2023-24. Okay, thank you, Chair.
Okay, just take some questions. Thank you, Maya.
Thank you, Chair. Can I just clarify for myself, really, when the schools that I'm involved with talk about children's services and social services for children in need plans, MASH referrals, etc., is this the Northamptonshire Children's Trust that they're talking about? That because I get a lot of dialogue at governors' meetings and trust meetings about this. So are we talking about the same thing, that the Council's children's services, they deal with children in need, MASH referrals, that kind of thing? Is that correct?
Yes.
Thank you very much.
Yes, that's correct. I think,
okay, so
yeah, as far as I'm aware, that the vast majority of that process, at least, I don't know how much of a front door we have within the council. The services for children's are primarily delivered within the Children's Trust. Yeah.
So from my perspective, it's more an observation, really, is that you mentioned that, I know you mentioned on page 94 and 95 that the reports are late, etc. And it was also mentioned that there's progress being made. And I would say it's not really where the progress is being made, but the perception that schools have is that the perception is at an all-time low of children's services. And my concern is from a child sort of safeguarding, it's almost getting to the stage of, well, what's the point of making some of these referrals because the bar is now so high, or we're not getting responses, we're getting turned down, that even though schools are still making the referrals, I can feel it's sort of like, well, what's the point? Should we even bother? We'll deal with it internally and this kind of thing. So it's more an observation that I think there needs to be a sort of I don't know the best way to put it, maybe a charm offensive, and just talking to the school, somebody from Children's Services. You can't talk to every school, but you can talk to a lot of trusts, because a lot of trusts have 20 or 30 schools underneath them. And then the trusts themselves can disseminate the information so that if they are having false perceptions of what's happening in children's services and how it's progressing and this kind of thing, somebody just needs to talk to those trusts and say, look, this this is what we're doing, these are the issues that we've got, so that the teachers aren't, and the Senkos, etc., aren't constantly just thinking it's a pointless exercise. You know, we're spending a lot of money on children's services and nothing is happening. So there's more of an observation that I think we do need to have some sort of communication with the education sector in general in this area through trusts rather than individual schools.
Okay, thank you for those comments. I think what is important here is that what we haven't got is the results from the Children's Trust and those sources of assurance, which we had concerns about in previous years. We still haven't had, but we're looking at this in the absence of that, also with the other services which are provided by other organisations. So this overall annual opinion, we've got to step back a bit. And I know Rachel advised that she's going to attend the annual, the delivery of the annual audit plan there. But I think that should that we have to rely on that. And we met with them a few months ago. It's more than about 4 or 5 months ago now. And they gave some assurances that that audit plan would be completed, and we need to see some evidence of that. And I think my suggestion is we should note this, but be mindful of the fact that we've still got, well, Rachel has said there's limitations, and we've got to make sure that we take account of them. And maybe we'll ask Rachel with some of those ones which have, they've given good assurance, BDO. I don't know what type of some of the audits that they have completed, what have they given good assurance over? Are there any, for example, safeguarding related ones? And then if we can address some of the points which the external auditors have highlighted, which was about the financial aspects. I think they might have been doing a medium-term financial plan one, so I don't know if you could update on that, please.
Thank you, Chair. So the 4 latest reports that I've received from the Children's Trust are relating to the medium-term financial plan, stakeholder engagement, contracts and commissioning, and contract management. And so obviously those are the latest that I've seen. So none of those are directly of a safeguarding nature as such. But as I say, I haven't received the full audit annual report for this year as yet. So.
And obviously one of the key points we highlighted to them is one of the key risks is the safeguarding risk. And that's what we need some assurance over. Now those ones clearly haven't got any safeguarding elements. Now the medium-term financial plan, what was their view on that? Because was this done by BDO under the control of West Northants?
I understand that's the case, yes. I believe BDO have delivered the majority of the most recent audits for the Trust, yes.
So have you had sight of those? Or?
Yes, I have received final copies of those reports.
And what overall opinion have they given on
for the
medium-term financial plan?
Medium-term financial plan was a level of good assurance for the control environment and satisfactory for compliance.
Okay. I mean, that to me, that surprises me. So that given the financial challenges they've had, that they've got a good assurance on their medium-term financial plan, because the it's where we started the day with budgeting and tying in with that. Medium-term financial plan. So I think that's outstanding. I think we should think about how we incorporate that into what we agree here today, because I think that's quite an important point in the completeness of this annual audit opinion. Councillor Hakewell?
Yes, on table 1, where we have the statistics summary of findings, whenever I look at something like that, with nothing to compare it with other authorities, I can't say whether that is a good report or not. Do we have like local government family members where we could compare an audit internally with another authority similar to us, just to see if that is reasonable? Would another authority have a much higher percentage? We had 3% in substantial or more in no. Because as it stands for us, it doesn't tell me anything about how good we are in comparison to anyone else. Thank you, Chairman.
Rachel, would you like to comment on that?
Thank you, Chair. So I do also deliver the audit service for other local authorities, but obviously they're not necessarily direct comparators, and I think they're obviously working in different environments and they're different types of service. One is unitary, the others are district or borough councils. So I'd be more than happy to share those comparators with you. I can happily do that. Obviously, it's difficult to compare with other local authorities because they will have different definitions and different assurance ratings. So you can get a general feel, I think, but not necessarily a direct comparison. So I'm more than happy to share links to those examples with you. That's why I do always include the comparison from the previous year as well, to give you a bit of a feel for any movement. But as you say, it's difficult if you haven't got a direct comparison. From my experience, it is generally where we'd expect it to be. I think I'd like to see a little bit more in the goods and less in the moderates. So it's obviously moving up that scale. But as I say, we are also focusing on high risk areas. So again, it really depends on which audits. The audit is in the audit plan. So again, it's not a direct comparison between different authorities unless you're doing the same audits. And you may have some higher risk areas in one than in the other. So again, depends how risk-based their audit plan is. So I'm happy to share those figures as a general guide, but it just with caution as to how you interpret them.
Thank you.
Okay, and see if there's any more comments from members. I think it's a good result for the council to get that level of assurance, and I think those points are well made by you about the level of moderates. Gives me assurance, because I think it's like a physiotherapist. You've got to press where it hurts, and if you're getting too many goods and substantials, I think we're looking in the wrong areas, and so I think it's all about your own environment, and I think this seems to me to be about the right shape that we should expect. And if you remember, we've changed these definitions, so there's difficulty in comparability between periods and obviously between other organisations, because they do have different definitions. But we've got to note the internal audit report and opinion for 23-24, but I think we should be mindful of the limitations that Rachel outlined there, and there's still some more to come which will come to this committee. It may cause us to reconsider our opinion when we get those in future meetings. So that's the recommendation. So if I look to the committee, somebody to propose and second, Councillor Marks and Councillor Jelly. All those in favour, please show. That's unanimous. Thank you. So that moves us on to agenda item 8, which is the internal audit progress report. And just so members are aware, we're joined today by Guy Holloway, who's, I think his title is Assistant Chief Executive. Is that correct, sir? Yep, thank you. Who has IT responsibilities, and there's some overdue recommendations which Rachel will probably pull out, and if members have got any questions, please raise them, and we'll put them to Guy. So I'll hand over initially to Rachel to present the report to the committee. Thank you, Rachel.
Thank you, Chair. So my third report today is the latest progress report. So obviously this includes the conclusion of any 23-24 audit assignments which hadn't been finalised in time for the papers for the last meeting, and also looks towards the delivery of the 24-25 audit plan as well. So the report is in the usual format, Appendix A from page 113 of the pack. So just going briefly through the audit reports, just to mention the audit plan that's provided within the papers from page 122 in Table 1 is the 24-25 audit plan, and also incorporates any audits which have been brought forward which were not finalised in time for the end of the last financial year, all of which are at those kind of final stages and of awaiting responses to draft reports. So I'll just go briefly through the key findings. There are 8 audit reports which have been finalised, so I do intend to do this very briefly, and I'd be happy to take questions on any of the detail if members would like more information. As I say, none of the audits have received opinions of less than moderate assurance during this period. So just in section 3.1, the first was in relation to hospital discharge invoicing. So this is an area we haven't audited previously. It's looking at that discharge to assess process where people do leave hospital and go into a care setting of some type, and looking at the financial aspects around that transition and ensuring that that's really clear to the service user around the cost implications and ensuring that we're recovering those costs as well. So we were satisfied that generally there were well-designed and embedded systems in place. The controls seemed to be well assessed and operating in practice. Based on the evidence that we saw, there had also been recent changes to the communication to service users around the implications financially for the discharges to assess process. And this does appear to have reduced some of the issues that were arising, which we had resolved as some complaints, which had resulted in some monies being written off in that area. Some recommendations we've made were around further documenting procedures to ensure that those are suitably robust and operating in the case of any changes in staff, and ensuring that those key controls will be consistently exercised, just further strengthening some of those controls that we reviewed during the audit. So overall, we've given a moderate level of assurance for both the design and the compliance, and a medium organisational risk based on the assignment at the time that we reviewed that area. The next was in relation to agile working, and we directly looked at the managing effectiveness conversations, which was essentially an initiative that came in to replace the standard one-to-one supervisions and staff performance appraisals. So we just wanted to look at this, particularly in light of agile working, that staff are now working more flexibly in terms of locations to make sure they are continuing to be suitably supported by the managers. So we were pleased to see that in all the cases we selected in the sample, there was evidence that managers were regularly having conversations of some type with those staff to discuss any work-related matters and well-being issues. The majority were using the me time form, which, as it's referred to within the guidance. Some were using it slightly differently, and there's some scope for some more targeted communications and guidance on applying that process. But essentially, we thought there was a low organisational risk arising from the findings and gave a moderate assurance over the control environment and the compliance at the time of the audit. The next was a project-related audit. So this was looking at the new project for the Kettering Library roof, which was in the initiation stage at the time of the audit. So being a key project, we wanted to get that initial assurance over the first stage and the foundations for the project, making sure that governance and control framework has been set up appropriately. Based on the evidence that we reviewed, we were happy that there's a good project management framework in place that's been set up to manage this in terms of governance and project documentation. We've made some low-level recommendations around tightening some of these, so looking at formalising the benefits realisation plan, for example, and being clear on the terms of reference for some of the groups within that governance arrangements as well. But overall, we've given a good level of assurance for the controls and for the compliance, and a low organisational risk based on that initial review. We will continue to revisit this project during the delivery stages, and it's in the internal audit plan later on in the paper. For 24-25 coverage. The next on page 117 was the carbon management plan. So the council has a carbon management plan, and we wanted to see how this is being managed to make sure that we are monitoring progress, that we're clear on how we're measuring this, so it's a meaningful reporting as well, and we're clear on our targets and where we want to be. So generally, we were happy that there's a good framework that's been put in place to govern this plan. It's clear what's expected, and there's progress and monitoring in place. What we have highlighted was a need for some additional verification checks around some of the reported figures, just to make sure that we can back all of those up by raw data. We've also recognised that actually in some areas the data simply isn't there at the moment, so until we have smart meters installed in all of the properties, for example, we actually don't know the full extent of some of those emissions, so it may actually have an impact on the overall target that needs to be achieved. So at the moment we're happy that it's progressing as it should, but we've made some recommendations, as I say, around strengthening those controls to make sure that we remain on track. I think it's fully acknowledged that there is a lot of work to do to get to that carbon neutral position by 2030, and we'll need to make sure that that continues to operate. All we can do at this point is give assurance over how that's being managed and monitored, and that was the purpose of the audit review. The next was a follow-up audit on page 118 of the pack in relation to housing repairs. So in 20 22-23, we issued an audit report on housing repairs which gave limited assurance both for the control environment and for compliance. So we wanted to revisit it in 23-24 to see how those areas have been improved. I think it's acknowledged that it remains a work in progress, and as we've discussed previously, there's still work that needs to be done to consolidate processes, to align across the piece with one single set of procedures and one system. So we did identify a number of areas where we do still seem to have some differing approaches between those properties in Corby and those properties in Kettering, which we've recognised here. We've also acknowledged that the clearance of the repairs backlog was on track, so that was good to see, and it's been managed as a project and appears to be well managed and monitored. What does need to be acknowledged is in the meantime we do seem to have a further backlog that has built up, and again that needs to be monitored and continue to be reviewed and intervened as necessary. So we did also make some recommendations again around data integrity to make sure that that data is being cleansed, and again this was an issue we had picked up previously. So whilst progress has been made in the areas we had made recommendations around, there still remains work to be done. But we were assured by the direction of travel that we have moved the assurance rating to a moderate assurance opinion based on the progress we've seen evidenced. But as I say, there's still work to do to continue to address the controls in that area. The next was in relation to continuing healthcare funding. So this is where we have a package of care that can be funded both by the Council and NHS partners. So we needed to make sure that we have a process in place for referring service users for potential CHC funding. And making sure we have a clear process for those referrals. Again, we were happy that there's controls in place, staff are receiving training, there are established systems that are being used. What we did identify was some limitations around the reporting functionality in the system to actually ensure we could identify CHC funded placements. So we've made some recommendations around working with the system provider to try and strengthen that reporting functionality. But also to remind members of the team as well about retention of audit trail records as well, to make sure that those are consistently evidenced for all of the cases. So we identified some gaps in the controls at the time of the audit. The next was in relation to business continuity management. So this is obviously recognised as one of the Council's biggest risk areas, as with any local authority or any organisation indeed, if we were to have an unplanned incident or an emergency event. We were reassured by a lot of work that had taken place in relation to business continuity, including some exercises involving the corporate leadership team. We were pleased to see the action plans that had arisen from that and the programme of work that has been developed to further strengthen the controls in this area and improve our planning. Based on that, we have given a good level of assurance over the design of the control environment, but we were only able to give moderate at this point in terms of compliance, primarily because at the moment, at the time of the audit, 62% of services had completed the business continuity tool, for example. So whilst it's a really good tool, we're happy that it will help prioritise our recovery action in the case of an incident. Until all of those are complete, we can't give assurance that it's actually effective in practice. So we just need to see some improvement in that area. We've also recognised the outstanding actions in relation to disaster recovery, which I think is an important interdependency with business continuity as well. And the last was in relation to staff recruitment. So the Council has adopted a new recruitment system, an e-recruitment system, which has been in place now since 2022. So we just wanted to get some assurance over how that's operating. Essentially, the sample testing that we undertook gave us some assurance that that is operating well as a process. It's being applied as it should be. What we did identify in sample testing was some areas of non-compliance with policy requirements around things like signing and verifying copies of right-to-work evidence in line with the policy, and also around retention of interview records as well, where those were not consistently available for the sample that we tested. So again, a good level of assurance for the design and a moderate for compliance, and we've made some recommendations along those lines to address that compliance going forward. So lastly, just to mention as well, we have an update for you on the implementation of audit recommendations. So on page 132 of the pack, page 20 of the appendix, we've shown that 41 recommendations have been closed since the last update to this committee and since the annual report statistics. That includes 8 high priority actions, which I think is pleasing to see. We do still have 110 actions which are overdue, 63 of those now over 3 months overdue. And we have had an increase in those which fall into that category of being over 3 months overdue and of high priority. And as usual, I've provided you with full details of those actions in Table 3 from page 133 of the pack. And just to note, on page 134, there are 3 actions which haven't been included in this table previously. They've now hit the trigger as they had a date of the end of December. They now are over 3 months overdue. And I've given you full details in relation to each of those. And as the Chair has mentioned, Guy is here to take any questions in relation to that, if you need any assurance around how those are being taken forward. So that's a run through again, Chair, of all the reports we've finalised, and I'm happy to take any questions. Thank you.
Yes, thank you, Mr. Chairman. Do we have an indication when a contractor will be appointed for the Kettering Library roof? Sort of time indication.
Through you, Chair, I would have to look for that information and get back to you after the meeting, if that's okay. Thank you.
I have a question on the housing repairs. I'm mindful of the fact that it's a follow-up. But I think housing repairs is normally indicative. Good results in housing repairs normally means housing's under control, from my experience. But I think some of the bits you've commented on a wider, so you followed up, but it's given me cause for concern, because whilst the backlog seems to be coming down, it looks like we're creating a new one. So it's one thing getting rid of one backlog, not at the expense of creating another one. And I think that's got a red flag for me. And I think that's one thing we need to follow up with them when they come to the next meeting, because it's just popping out elsewhere. And linking it back to what came out of the external auditor's summary as well about the stock condition survey, you can see it's still very poor for Kettering, and you've still got that inconsistency across our area. We've got inconsistency between Kettering and Corby, which I don't think is acceptable. Everybody should have the same reasonable expectation of their housing, irrelevant of which former district at borough it fell in, and also the other parts which don't have stock in the council as well. So I've got some wider aspects there. I'm not doubting Rachel's report there. And also I'd like to ask Rachel a question on how concerned she is about this level of actions over 3 months. When should we start getting concerned? Yes, there's not very many of those high risk, and we'll speak to Guy about his elements in a moment, I would imagine. But is that getting too high? Do we need to get this up the agenda with the senior leadership team to make sure that these are done? Because it's great getting all the audits done, but if they're not following them up on a timely basis, it weakens the effectiveness of the work that's been done and the valuable work that's been done. I don't know if members have got anything they'd like to add there. Councillor Roberts, did you like to say anything? Councillor Jelly?
It's not so much on that. You've made a good point, and you've made it well. The housing stock, I'm sure that the people in charge of the housing are doing a review of the housing stock, which will bring out an awful lot of work for the future on a rolling basis. We talked right at the beginning with our training about the circle was used because it never ends. And I hear what you say. I think what we want is a sort of timeline that goes with the flow, goes with the job, keeps us informed as what progress is being made.
Thank you. Councillor Jelly, did you have a comment?
Yeah, thank you, Chair. 2 things. Firstly, the capital project on the Kettering Library roof. Should I declare an interest because I'm on the project management board?
Yeah, I don't think it impacts on. I don't think it impacts upon our deliberations,
Right.
obviously. But we'll note the fact that you're involved.
All right.
Yeah.
The other thing as well is I agree with you about the repairs to the council houses and these voids. You know, I was looking through the report, and I think it was 65 and a half days, and it went down to 53, and it's now gone back up to 56.
Yeah.
But all of those days that those properties are empty, we're not getting rent.
Yeah, and they're lost families that are not being housed.
Absolutely,
I think
yeah.
Councillor Hakewell mentioned about benchmarking earlier on. This is a clear area where we can benchmark, and there's nationally
absolutely.
available statistics through Housemark and things like that.
Yeah.
And we need to get some assurances about how are we comparing against others. And everybody will always make the case, well, they're different here.
Yeah.
Well, everybody can say that in every part of the country, but you know, we need to have a pressure to manage voids down, you know, manage the results from repairs up. And
we've got housing coming to the next meeting, haven't we? So, you know, perhaps that's something they could
these
give us a
things
really
need knitting together and
update
getting
on what's going
an overall
on
view.
there, because, I think that's something we really need to concentrate on, definitely.
Yeah, I think we should definitely focus on that. Councillor Watts?
Thank you, Chair. I was just going to ask the very simple question about the Kettering Library roof as to who is on the project group. And then curveball comes, and Councillor Jelly says, I'm on the management. So is the management group different to the project group?
It's a project group.
Because I'd just like to know who's on that group, whatever it's called, definitively, because it's something we've been trying to find out for a very long time. We'll have a word after, shall we? Okay, thank you.
Okay, look and see if there's any more questions. What I would like to do is ask Guy to give us his opinion on the movement. Obviously, we've had some movement there of 8 months, 12 months, and 10 months on some key areas, and these were reflected back in the the external auditor's review from the other year as well. So they're really high profile. I wondered if you could explain where you are with those and why they've moved and what the implications of the movement are.
Yeah, absolutely, Chair. And first of all, I fully understand sort of members' interest and concerns around it. There's been some very high-profile cases, certainly recently, obviously with the London hospitals, around business continuity and cyber breaches, etc. So I think the first thing to say is this needs to be looked at in hand with the other things that we're doing to minimise the fact that we get to the stage where we have to rely on our business continuity plans. Always really important that we've got those in place, though. I think the other thing I'd say, obviously absolutely critical we have the business continuity plans in place, but we want them to be right. So as you can see, we did a major exercise back in October 2023. That really was a big exercise. That was modelling taking the power away to all of the council services for a number of days, which involved us effectively shutting down all of our systems and restarting them again as a desktop exercise. So coming out of that was a lot of learning. That's, I think, perhaps being over-ambitious to start with in terms of the timescales, because the learning from that's done is it's gone through the business continuity group, it's gone to the corporate leadership team, it's now come to IT, and we're working up the detail on that. And we have actually put a deadline of the end of July for getting that business continuity list up and ready. That will then feed into the next stages where we'll do a full business impact assessment. And I think the view I've taken talking it through with the Chief Information Officer is quality is more important than speed, because what we want to be in is a situation where we can really rely on these plans when we need to call on them. What I would say, Chair, really important factor is we do have plans in place, and we do also have really good, committed and experienced staff. I've experienced before situations where you can have a really good plan, but actually unless you've got really good people to enact it, actually it's not really worth the paper it's written on. So what we want, we've got really good people, we've got really good experience that's been borne out by other instances where we've had to put in disaster recovery arrangements which have worked well, but we want to put a bit more effort in to get the disaster recovery plans just right so that they're really adding the value they need to add. So we're taking a bit longer to do that. The other thing, just in complete transparency, we did have a situation where we had 2 key members of staff leave, and again took the decision with the Chief Information Officer that we wanted to get the replacements in place so they could take ownership of these things moving forwards, rather than to move the work to someone else and take them off something that they were doing, which would reprioritise their work and effectively mean that we might be more reliant on the need to use those disaster recovery plans. So we feel we've taken a conscious decision about the route we've taken, but we've been really open about where we are and have been keen not just to rush something in and tick the box, but to get it right. So I think that's the approach that we've taken, I'm comfortable that we've got the right resources to focus on it. You can see one of the actions that we've we put in there is to actually consider the resources that we're putting into the business continuity. So we will take a decision when we've got the business impact assessments done, whether we feel we've got the right level of resource moving forwards and whether we need to put a little bit more in there. And there's a number of options available to us to do that, Chair. That's a really whistle-stop tour as to where we are and an explanation, and happy to take any questions.
Okay, thank you for that report. Anybody got any questions coming out of that? So by the time of the next committee, we should have seen, hopefully, the top one of those move off. You believe, and we accept that these things have moved. Do you think the risk has increased significantly because of the movement of these dates?
Chair, first of all, I think it's really important to say having good disaster recovery plans is really important. So don't for 1 minute diminish the importance of them. I mentioned about it goes hand in hand with other things we're doing. So what we have been doing is strengthening, and again, we're not naive to the fact that this is a very fluid situation, but we have been putting more effort into our cybersecurity mitigations. So I think actually we're probably in a situation where we've done more work to mitigate the need to use these plans. However, it's still critical we have them in place. So I'm on the basis that I know that we've got a team that know what they're doing and can respond. I'm comfortable by that, but I will feel more comfortable when we've got the plans put in place, Chair, and I'm not going to lie about that.
Okay, thank you for those assurances. I'll just see if there's any other points. Just flicking back to one of the other high priority actions overdue, I wondered if, Claire, you could give us an update on the main accounting system priority action. Obviously, that's moved from 17 months, that one's moving. I wonder if you could explain to the committee in detail the reasons for that. Thanks.
Thank you, Chair. It's not necessarily the date that we will achieve this by, it's just given us a long date in terms of all the work that we will be undertaking during the course of that year that we've already alluded to in terms of the accounts and the audit, etc. What I would want to reassure you is that the bank reconciliations are undertaken on a regular basis. What this is looking at is our overview in terms of it being carried out by a third party, and the NNC officers are providing the assurance to the team and myself that those bank reconciliations are carried out in an accurate and timely manner, which they are. We are working to ensure that we do carry them out on a monthly basis, but there are and will be times, given the complexity and nature of all the work that we're doing with the accounts, where we may not be able to do that. And it's just recognising the pressure and constraints that team is under. So I have extended that timeline out just to be able to cover ourselves, that we are monitoring it, but just to sort of bear in mind with us that we have got a lot of work to undertake in terms of closing down those accounts, and they are undertaken, and we know it's very important. The timeline when this was due to be delivered, we were in the throes of implementing a new income management system as well. So again, resources were diverted from that. And part of this is also working with our colleagues and building those relationships and rapport with that team, which we're now currently being successful on and working through, making sure that we fully understand how those bank reconciliations are done, and that they all coming to the right people in the right time for us to review and sign off. So I'm happy that I can provide you with reassurance that they are being done. Again, the timeliness of that might be slightly out of kilter as we start to work through some of the audit recommendations and work that we'll need to do to complete the 23-24 accounts.
Okay, thank you for that. And the other main one is that Children's Trust. I think that's going to demonstrate to us that when external audit write their report for the following year, it's going to be in there then, because this wasn't resolved. But it's looking not too far away now, 30th of the 9th, 2024. So hopefully in the not too distant future we should get some positive results there. Yes. Michael, thank you.
Yeah, just a point from my experience, when you have things that are so overdue, this sort of the deadlines become a bit meaningless, and for example, if the Children's Trust comes and says, "Oh, we'll be like 31st of December now," you just think, "Oh yeah, there's another 3 months." It's 2 or 3 years. So it's just an observation that the ones that are sort of within 3 months, and you get quite keen on the deadlines, but these ones are so long overdue now that I think we just need to get them done and off here, because the deadlines don't really mean anything for me anymore.
Yeah, fair point. Okay, so just let me flick back to see the... Sorry? Sure, yeah.
Sorry, thank you, Chair. What I would just like to reassure members on, in terms of trying to respond to internal audit report recommendations in a timely fashion, CLT have now incorporated that into their quarterly health check KPIs. So what we are doing is bringing all the internal audit recommendations and actually highlighting them in terms of what's not been responded to in an appropriate timeline and appropriate manner, so we can start to get rid of all the backlog and really focus on those ones that are deliverable within the timeframes that we have. So from that point of view, we're trying to ensure that we can support Rachel in delivering those internal audit recommendations from senior management, and we're trying to ensure that they are brought into the KPI health check that we have at CLT, and in supporting and getting that message out, that it's not acceptable, including myself on that naughty list. You know, we all have issues and resources and complaints that we need to deal with, but we need to ensure that we highlight this as an important part, an integral part of our control environment.
And nobody likes going to the naughty step, do they? No. So I think that's really useful that's been ramped up the agenda by the CLT. So I know Rachel always reports this. It'll be useful to be able to see the direction of travel going forward, to see quarter by quarter, or just for a period of time, so we can see, is it coming down as a result of that? Thank you. So the recommendation is the Audit and Governance Committee notes the annual internal audit report and opinion for 23-24. If I could just look for a proposer and a seconder for that. Councillor Jelly and Councillor Marks, thank you. And all those in favour, thank you, that's unanimous. So that there's no urgent or exempt items, in which case I'll close the meeting at 15:54. Thank you for your attendance, especially all those who've come from afar.